Mark, welcome. Good to see you. I sense that you are worried in this report, particularly about what is happening to black workers in terms of wages, in terms of unemployment, in terms of hiring.
You know, Ty, I think it's important to look at the report on balance. What I really see is this consistent, robust job creation. I see that notwithstanding the fact that black unemployment is still twice as high as white, it is down to a level not seen since before the COVID recession. I also see, according to a report by Brookings, that the wages for those in the bottom quartile has increased faster than those in the top quartile, which means the beginning of maybe some changes in this sort of income gap that's been persistent in the American economy. So I think it's important to look at every report with balance. There's a tremendous amount of good news in the economy, the fastest recovery post the recession in modern times, an unemployment rate and robust job creation, which is at a strong tick. The future of infrastructure investment, chips and science investment, renewable energy investment by the government, which will incentivize and encourage more private investment, bodes well for the future. The yellow lights, the caution notes, are also all around inflation and the impact that inflation will have, and questions with respect to whether the Fed really has the tools in its toolbox to tamp down inflation. I do not want to see unemployment become the weapon against inflation, because that does not bode well for the future of the American economy. So this is about calibration. It's certainly about balance, and it's about what level of inflation we can truly tolerate while sustaining growth and job creation.
Yeah, well, you've got unemployment, what, at 3.5% in the most recent numbers, and that is a tremendously low number if you really look at it there. I mean, I guess the Fed's tools are a little bit crude. It's monetary policy, it's interest rate policy. I mean, monetary, when I'm thinking of monetary policy, I'm thinking of quantitative ease and quantitative tightening. They've been taking money out of the system. But prior to that, they've been really pretty much flooding it in, and that's probably as much as anything why inflation is as high as it is, or
Ty,
was.
One of the things we all should keep in mind is the global nature of the United States economy. Its interdependence on Europe, Asia, even Latin America and Africa, where the factors and the products that we buy, or that which is used to manufacture the products that we buy, indeed come from, how finance works. So the American economy may be 1/5 of world GDP. In 1960, it was half of world GDP. So the ability of Fed policy to impact, if you will, those things that are as a result of what is happening in China or in Europe due to Russia and Ukraine may be somewhat limited. I am not a doom and gloom person. There are a lot of chicken littles with PhDs running around predicting gloom and doom. That's not where I am. Where I am is caution and certainly modulation, but we've got to continue job creation. We've got to continue growth in the American economy. We've got to continue to address the difficult issues of, if you will, wage gaps and wage inflation and the black wealth gap and the racial wealth gap, while at the same time continuing growth that's going to benefit all. We're better able to confront the difficult challenges of the American economy if we're growing.
Right.
If we're growing at a sustained and consistent pace. So I see green lights. I see some yellow lights.